Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, November 19th. The correction in the US yields and the US dollar gave a boost to US big caps yesterday, along with some good news for Tesla regarding a legal framework for full self-driving vehicles. Now, in the FX markets, major currencies recovered yesterday against the US dollar while oil rallied, but be careful still because the futures price curve for oil suggests that investors are factoring in an oversupplied market for oil, and that could eventually limit the upside potential for oil prices. So the week kicked off on a bullish note as the recovery in US Treasuries and the retreat in US yields helped boosting appetite in major US indices yesterday. The S&P 500 rebounded 0.39%, while Nasdaq 100 added 0.71%, supported by a more than 5.5% jump in Tesla shares on rumors that Donald Trump's administration wants to make a federal framework for fully self-driving vehicles one of the Department of Transport's priorities. And remember, Elon Musk robotaxis is one of the company's priorities for the future development of the company and had helped earlier this year revive appetite for Tesla, and that despite the slowing sales of electric vehicles. So yes, the news couldn't come at a better time for Tesla, really. Now, news were not as great on Nvidia's front though, as Nvidia's Blackwell chips, these next generation super powerful chips that see an insane demand according to the company's CEO Jensen Huang, will reportedly overheat, requiring redesign and delay for deliveries for customers. Now, of course, you can argue that this type of adjustments are standard for such large-scale technical releases, and they should not have a material impact in the long run for the company and its demand. But the delay in the short run means that the big customers like Meta, Google, and Microsoft, for example, which spend big on AI, won't have their chips on time, and the latter will extend their payoff period on their AI investments at a time when investors can't wait to see these investments bear fruit. So Nvidia retreated 1.30% yesterday. That's not a big deal, mind you, as the news that the company, so Nvidia, is now working with Google to design their next generation quantum computing devices will eventually help countering the negative vibes of the overheating Blackwell chips for Nvidia. But the Blackwell news triggered a 3% rally in AMD shares yesterday that also sells high capacity chips for AI applications. Remember? So the MI325X is expected to begin production by late 2024, while the MI350 series aims for up to 35 times better inference performance compared to its predecessors and is set to launch in 2025, according to ChatGPT. Wow, that was hard to pronounce. And in a more understandable English, a misstep from Nvidia could help AMD gain some market share. At least this is how investors price in the news right now. But anyway, investors around the world are focused on next earnings report from Nvidia that will land on Wednesday after the market's closing bell, and will hopefully put a number on how insane this demand for these Blackwell chips are, whether they are overheating or they are not overheating. Now, beyond technology, the Dow Jones Industrial Index was not cheery at yesterday's trading session. The index actually closed the session slightly lower, while the small caps in the US were slightly up on lower yields in the US. But the direction of the US yields are not necessarily encouraging for the small cap investors, given that these small cap companies have smaller margins to deal with higher borrowing costs. As such, the buyers are seen more crowded in big caps for the US equities, and even the most bearish of the bears on Wall Street are now busy lifting up their price targets for the S&P 500, because the 6,500 target is now increasingly pronounced for the S&P 500, while gold is also among the top picks at Goldman Sachs, for example, apparently, which sees the precious metals price top the $3,000 per ounce level next year. in the short run. But the retreat that we see in the US yields actually helped throw a floor under the gold's retreat after Trump's election. And we see a beautiful support forming near the minor 23.6% Fibonacci retracement and the 100-day moving average, and that's around the $25.50 per ounce level. Here in Europe, while the STOXX 600 index was flat at yesterday's trading session, there in China, stocks are lower today as the Chinese authorities gather in Hong Kong in order to discuss their latest developments in China's financial sector, while the Japanese Nikkei index is under the pressure of a stronger yen, of a small rebound in the Japanese yen against the US dollar, on the back of a broadly softer US dollar, obviously, a move that I personally believe is just a correction and a minor short-term correction of the past few weeks rally that we saw on political developments in the US and the hawkish shift that we saw in Federal Reserve expectations. So, looking at the other currencies, the other major currencies also benefit from what could be a brief pause in this US dollar rally. The euro dollar, for example, tested the 106 psychological resistance at yesterday's trading session, supported by the broadly weak US dollar, obviously, but also the news that Greece will repay 5 billion euros of long-term debt before time. That's truly amazing, guys. I mean, just a decade ago, Greece was the troubled child of the Eurozone. They were actually in the middle of a debt chaos. Remember, they defaulted on some of their payments of that, and they even put the euro at a very, very difficult position. It was a disaster. I mean, we as analysts were spending a good deal of our time finding a new title to describe the country's financial misery every single day. And well, 10 years later, boom, the turnaround has been magic, really. The country still has the highest debt to GDP ratio of the euro area bloc. But the fiscal discipline there actually pays off, and Greece is now ready to pay back its debt before schedule. Meanwhile, the funny thing is, Germany and France are struggling today and are making the bad headlines. Who knew? The unthinkable. But now I'm not really sure that good news from Greece only could get the euro back on its feet. So the price rallies that we might see in the euro dollar will soon create interesting top selling opportunities for the euro bears to come back to the market and eventually give another try to breaking the 105 supports back. Now in energy markets, US crude actually posted a beautiful 3% rally at yesterday's trading session, but the bulls could find the $70 per barrel offers hard to clear as the ample global supply and weak global demand outlook actually remained supportive of the oil bears today. So note that the short end of this market just shifted into contango yesterday, where futures with immediate delivery trade lower at lower prices than those for a month later, with the expectation that oil, which is supposed to be, or which is considered to be in oversupply today, will be more expensive to store for future delivery. Now, usually the oil market is in backwardation, mind you, so the fact that the short end of this curve has turned into contango is just yet another signal that investors out there price in an oversupplied oil market, which could eventually cap the upside potential of short-term price rallies in oil. So solid resistance is seen between the $70 to $72 per barrel range, and the key resistance to the actual negative trend in US crude that has been building since summer stands at the $72.85 per barrel level, which is the major 38.2% Fibonacci retracement on summer decline. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow And until then, good day trading.